because as you get elections and they allow you to bet, it does well. In the meantime, I had, just full disclosure, I had a fantasy show on DraftKings, and they are very good at getting attention. And nobody gets more attention than Marshall. Nobody. Who liked, by the way, the halftime show. That was really good.
Let's get the opening bell here, and the CNBC real-time exchange. The big one is Deutsche, celebrating Black History Month. At the NASDAQ, it is Etsy, celebrating the recent launch of its gift mode, which combines AI and human curation. There's another ad from last night.
Did they somehow come up that the French want cheeseburgers?
New retail data just out. Steve Leisman has those numbers for us. Hi, Steve.
Good morning, Becky. Yeah, after a strong holiday shopping season, looks like consumers took a little bit of a break in January. The CNBC NRF Retail Monitor, who use credit card data from Affinity Solutions, registering a modest decline in January. Retail sales ex auto and gas, that's our top line number, down 0.2%. That's after a 0.4 gain in December and 0.7 in November. Year over year decline to 2.3 versus 3.1 in December. Core retail, that removes restaurants, down a little bit less, 0.04. You'll see why in a second. That's against 0.2% in December. Year over year, though, increasing to 3.2%. The January decline, though, follows two strong months right in the heart of the holiday season, so that was good. But it could challenge, we don't know yet, some of the GDP forecasts for this quarter of around 3%, especially if that weakness is repeated in February. Here's how we got to the negative number. Gas station sales falling minus 1.3%. I will tell you that sometimes you get a decline one month in gas sales and some of the discretionary stuff goes up the next month. Right now, furniture and home furnishings were down 1%. And then you had a decline in food service and drinking places that could have been hurt by some bad weather this month. So clothing and accessories were up, non-store retailers, that's your internet, that was up, and electronic appliances had a good month, up 1.3%. Here's the way you can see how the CNBC NRF Retail Monitor, they've tracked with the government data. Forecast looking for a 0.2% increase ex autos and gas. That'd be reported by the census for January on Thursday. Now, depending upon where January inflation numbers come in tomorrow, that is, so make sure you tune in at 8:30, this number could show that real consumer spending was flat or even negative for January. Watch to see if this is the beginning of that slowdown that's long been expected but hasn't yet arrived, as you know, Becky.
Just like Bitcoin, they love Bitcoin. If you think of these assets, there's been over 5,500 ETF launches in history. Never have we had a fund get to $3 billion in AUM in the first 30 days. BlackRock and Fidelity both just did it. So two for the first time in history. And then if you look at Bitwise and 21 Shares, ARK, they're both going to hit $1 billion this year, or this week. And so now you have four funds that are going to hit $1 billion of inflows. But the most interesting part of this is the inflows. These funds are doing $500 million a day of net inflows. But there's only 900 Bitcoin that is actually coming into the daily incoming supply. And so when you look at that, that's like $40 to $45 million. There's 12.5x more demand for Bitcoin than what's being produced on a daily basis.
So how much of this do you think is being generated by the ETFs themselves?
Well, I mean, you can just measure the actual net inflows, right? And so you can just see there is way more buying pressure.
So you're saying $3 billion for BlackRock?
There's $4 billion now for BlackRock, 3.5 for Fidelity, and then you've got Bitwise and 21 Shares will both hit about $1 billion this upcoming week.
Total valuation, though, of Bitcoin on a market cap is $1 trillion. So isn't this a de minimis issue or no?
Now here's where it gets really interesting.
Most of these things aren't trading.
80% of all Bitcoin in circulation has not moved in the last 6 months. You have only about $200 billion that's actually tradable. And so that means that these ETFs sucked up 5% of the entire tradable supply of Bitcoin in 30 days. I mean, Bitcoin has become Wall Street's favorite asset.
What were you going to say, Joe? I can tell you.
I'm not going to say. 5% doesn't sound like a lot. Here's what I'm
30
thinking.
days?
It used to take a lot for someone to invest in Bitcoin.
Yes.
It's real easy right now. And I don't know, are we going to 90,000 in a year? That'd be too weird. People don't double their money by buying an ETF in a year. So I think that now I think it might be a currency that you can use because it's going to stay at 47,000.
Well, the world is changing for sure. I mean, last year, the NASDAQ was up 50%, right? And so there's definitely these big moves that happen in the traditional markets. Bitcoin obviously is that on steroids. But the other thing that's now starting to happen, Fidelity just came out and they've got a fund. It's an all-in-one fund out in Canada. And they're going to put 1 to 3% of that fund into the Bitcoin ETF. And so what you're going to start seeing is not just direct inflows into the Bitcoin ETFs, you're going to start seeing them putting Bitcoin into all of their funds because it, from a risk-reward standpoint, drastically improves the performance of these portfolios. And they're going to start to realize if I'm lagging indicators, if I'm lagging performance, if I put a little bit of Bitcoin, 1 to 3% into this portfolio, it's going to enhance
I think Bitcoin, I think it might be good if it stayed at 47,000 for a year, because then it would, people wouldn't worry about buying a pizza that's worth a Mercedes 2 years from now.
The joke in the Bitcoin community is the real Bitcoiners want the price to stay low so they can accumulate more of it, right? But obviously, when you have this much demand, the price got to go
a
up.
year from now, it's where?
Oh, it's much higher. I think that if this continues, if we have 12.5 times more demand than we do incoming daily supply, and remember the halving is coming, so we're going to go from 900 Bitcoin to 450 Bitcoin a day. I mean, this thing's going back to its all-time high. It's pretty much guaranteed at this point.
What's that other thing called, Becky, whenever you talk about the halving? You know, where we all go up to heaven and something. Someone's left behind.
The rapture?
The rapture. The halving is like the rapture to you really hardcore.
Let me ask you this. You're a bull, you're an owner. What's the thing you worry about? I think wrong about it?
Yeah, I think the biggest thing is it's not so much right or wrong as much as it is like the return of this asset is going to dampen over time just as it gets larger and as the holder base changes. One of the things that hasn't happened in the Bitcoin community previously is things like rebalancing. And so when you all of a sudden give financial advisors an asset, and let's say you have a 1% allocation and it goes to 5%, you're going to sell. You're going to rebalance that portfolio. And so when the holder base is changing, you have to understand that the return profile will come down. And so if you think that you're going to buy Bitcoin and it's going to help you retire, those days probably are behind. But what it will do is outperform stock.
But then you're not in the camp of the Kathy Woods $500,000 $1 million base case Bitcoin valuation issue. Because, by the way, if that's true, then you can retire.
Yeah, I mean, look, again, it depends on the timeline, right? So if you're saying it's going to go from 50,000 to 500,000, which is 10x, and that's going to happen over the next 10 years.
Yeah, I think she thinks that that's what's going to happen.
That's not that crazy, right? I mean, again, NASDAQ was up 50% last year. I'm not saying NASDAQ's going to go up 50% every year, but we live in a world where it has completely lost all ties to reality because we are printing an enormous amount of money. The interest payment on the debt is $1 trillion. Right? It was a video game number. And so in that world, how much are these assets worth when the denominator is just being debased away? They're going to be worth a lot more. You can just start putting zeros on the end of the values of these assets.
Anthony.